Okay, let's get in one more voice. Rajat Rajgarhia, Director Research at Motilal Oswal Securities, joins us right now on the show. Rajat, where could the selling stop? I mean, it's the FI selling which is now getting vicious as the days go by. Would you think a bottom of around 5,500 or 5,400 are levels that we could see in about this bout of weakness?
Well, there's really no level in mind where selling will stop, because selling generally is not a function of till what level those sellers would like to keep on selling. It's more a function of events, and I think last 3 months have been very important, because these 3 months have seen a new series of downgrades that have happened from the macro level to the corporate earnings, and somewhere the markets are getting realigned to that. Secondly, we need the effective transmission of monetary easing into the system, because that hasn't happened at all in the last 12 months. While RBI has cut rates by 100 basis points, the bank's base rates have been down by just 20-30 basis points. So there is virtually no monetary easing which has happened into the system. Some of these factors, if they don't change and the downgrade cycle continue, then I fear that there is no level at which the selling will stop, because if people want to sell, if FIs have put in $30-35 billion in the last 15 months, they haven't sold even $1 billion yet.
Right. Rajat, let's talk about a pocket where there's scope for an upgrade, not downgrade, and that's a large cap IT space. Do you think it's time, where Infi could surprise the IT sector by itself would get an earnings upgrade?
Well, yeah, in fact, this is one of the exceptions this quarter where almost all the companies in our universe in IT have seen some marginal upgrade for FY14. And this is not driven by any currency change. Our currency assumptions remain stable in a band of 53-54. It's more driven by slightly better top-line growth estimates that we are modeling in. So IT would be the sector which is looking good. Upgrades are continuing in an otherwise environment where downgrades are the flavor of the season. But somewhere I think that is also getting priced in when you look at the stocks, because these stocks have been reasonably big outperformers in the market. I would think that the top-line growth assumptions for FY14 are coming closer to what these companies are likely to guide for, at least in the first half of FY14. The further upgrades in the numbers here only come if you see maybe another 4-5% weakness at the currency level, which at least at this point of time we are not thinking in. So more or less I think the upgrades are tiny, but more importantly there is no downgrade in the sector, which is what is holding on.
Right. Give us a sense then on what is it that you would make of the mid-cap end of the market, because most of these stocks are trading below significant technical levels. It is alarming considering we are stepping into an earnings season. What do you make of the mid-cap end of the market?
Well, I think we are now coming to a stage where many of these mid-caps will have to seriously restructure, deleverage their balance sheets. And we have started seeing that process now happening, right from IVR CLs to Future Group and many other names that we keep on hearing. This of fall into the markets will definitely force many of these companies to further deleverage, because the market is in a very punishing mood. If you look at the last 3 years, the sectors which have outperformed are all the ones which have cash on the balance sheet, and the sectors which have been going down are the ones which are either leverage or where the earnings are cyclical. I think you see another 2 quarters of this subduedness in the market, and the amount of restructuring or deleveraging exercise will just pick up into the system. That is one. Secondly, the first point that I mentioned earlier, that there is no effective transmission of monetary easing that has happened in the system. You need the system rates, not the RBI rates, but the lending rates to come down by at least 100 basis points to provide any breathing space on the interest cost to these mid-caps, because many of these companies' interest costs would now start hitting above the EBITDA level for these companies, right? So So there is virtually no relief that they are seeing on any front. Feb and March phenomena, I think a lot of the phenomena could have been technical also. We saw a big sell-off in many of these names. But some of these names which are doing well, for example, Pantaloon, which has done reasonably good restructuring, PSU banks, which have also got hammered badly, stocks like Jayaprakash, which are also down 40%. I think several of these mid-caps, just one or two favorable news flows can provide some reasonably good return in them.
Okay, stay on, Rajat. Lots more to talk about. Let's first go across to our research analyst Poonam, who is here with some of the volume buzzers in the session today. Poonam, tell us.
Well, Neeraj, we have IGL, of course, topping the list, wherein the volumes are nearly 44 lakh shares have been traded and the volumes are close to 8 times on a 2-week average basis. The IGL and PNGRB hearing has been adjourned to 16th of April, and today there was a lot of movement in this stock, as many of the participants were expecting that there would be a final hearing, but so far, final verdict rather, but so far the hearing has been postponed, or rather adjourned to 16th of April. Next stock we have picked up is Coal India, wherein we have again seen volumes nearly 2 times on a 2-week average basis. Reports, of course, have been there that the government is looking to liquidate at least 10% stake in Coal India, which is inclusive of divestment, which is inclusive of selling the stake as well as buyback in Coal India, and which would fetch the government at least 20,000 crore of revenue. Next stock is wherein Punch Lloyd, wherein we have seen volumes of nearly 1.1 times on a 2-week average basis. Close to over 1 crore shares have been traded. Stock is up close to 29% in the last 2 weeks. The recent news in the stock was the company had won a contract of 314 crore for an offshore project in Saudi Arabia, and on the back of that we have seen quite a lot of positive movement in this stock. Lastly, it's Mahindra Finance, wherein the volumes are 1.2 times on a 2-week average basis. This stock is again up close to 7% in the last 1 week, and the company has recently, or other sources say that the company is of course recently looking to do a bond sale, which is in the normal course of business, but this stock does remain amongst one of the favorites among the NBFC stocks in terms of value picking.
Okay, Poonam, many thanks for that. So those are some volume buzzers in trade. Stocks like Reddington have fallen on heavy volumes in today's trade as well. In fact, volumes have expanded quite materially for Reddington, almost 5 times 10-day average. So it's fallen 6.5–7% on fairly heavy volumes. No surprises, of course. IT as a space is looking extremely weak today. Mitesh, a word on Reddington, 6.5% down today.
See, I think, broadly this is a stock which has been going through a big declining trend. Yesterday it broke below its 200-day average and today it's also declining. I think the next support is at around 68, but the overall pattern is such that, there's a good chance that we'll break below 68 and we might see lower levels, which is around 57, 57.5. So I would be bearish on this stock, and I think even now if somebody has a chance to exit, I think that will be a good trade.
Reddington is down about 6% in the session. Mitesh, also a quick perspective on Jayaprakash Associates, down 6%.
See, JP Associate along with the other stocks in the market kind of managed to bounce back in the last 4 days, hit the 20-day average around 70 mark, and then it started to decline again. This support of 63, 62.5 is very important. I think it kind of bottomed out around there in September 2012 as well as a couple of days back. So I think if it breaks that, then I think we will be looking for more declines, possibly to about levels of 56.
Okay, let's just get in what dealing rooms are saying very quickly before we get in the BTSCs from Mitesh as well as Ashwini. In fact, let's just do that. What dealing rooms are saying in trade. Darshan, very quickly, what are your sources telling you?
Well, at this point of time, they're saying there's a lot of basket selling happening in the Nifty, especially it's the ETF funds which are doing it. They did it yesterday and today also. There is a significant amount of selling happening. The Nifty is down almost 100 points. Stock specific, HCL Tech is something that dealers are recommending to short. What we hear from institutional guys is the fact that there is a big FII who wants to sell significantly, and he will keep on selling his shares in blocks in HCL Tech. And the last one is the Bajaj Auto, in which dealers are recommending to short on the basis of technical trends.
Yatin, what is it that you're picking up from dealers?
Well, Tanveer, clearly carnage in the markets, especially in the frontline stocks. And if you talk about the Nifty, which is trading now below its 200-day moving average, out of the 50 stocks on the Nifty, we have 33 stocks already trading below the 200-day moving average, and 17 stocks which are there that are trading above the 200-day moving average. So clearly, if you look at the bear versus bull scenario here, 2:1 is the kind of ratio wherein there is a kind of weakness which is witnessed in the markets. Talking about stock specific ideas, Hero MotoCorp is one stock wherein dealers are recommending a sell. We are seeing a significant amount of delivery based selling which is coming in from the FIIs, and dealers also have been indicating that the stock has broken its 200-day weekly moving average, which has been the case since 2004. So clearly in a period of 9-10 years, this is the first time Hero MotoCorp is trading significantly below that 200-day week average. So further weakness here is expected. And JSPL is one stock wherein dealers are recommending a STBT strategy. A 3 to 4% correction from the current levels is possible, is what dealers are indicating in closing trade.
All right, let's get in closing strategies from both our guests. Thanks, Darshan Yathin, for bringing us that dealer perspective. Come to you, Ashwini. What is it that you'd recommend in the 10 minutes left?
Well, metals is really weak, and some of the stocks are breaking down from consolidations that they were in. So JSPL is a sell with a stop of 335, target of 318, and I don't think this is going to stop very easily. But the point is not buying will come back at some point. The point is, when does the selling exhaust? So that's the reason waiting is a more useful strategy right now than trying to predict X and Y levels.
Fair call. Mitesh, what about you? What is it that you would recommend as a BTST or rather STBT in this case?
Yeah, I think it has to be an STBT call. We had a sell call on Ultratech Cement. I think the other stock which is getting weak or ready for a breakdown is India Cements. Sell this one with a stop at about 82.5, and I think 76, 75 could be a good target in the next few days.
Interesting. So sell call on India Cements as well. Mitesh is saying a price of 75 or 76 in the next. Mitesh, is this a positional call, or would you believe these levels could come in the next couple of days itself?
No, I think it's a 2-3 day kind of call. Typically in a declining market, stocks can slide much faster. But I think in a normal case, given the fact that India Cement is slightly low beta stock, I would expect this to be a 2-day kind of a call. The BTST was actually Dr. Reddy's. I didn't have another BTST, so slightly a 2-day kind of a call.
Fine. I mean, cement as a pack has looked weak, Mitesh. Ultratech, you mentioned you had a call in the morning. India Cements is down right now. What about the other two, ACC, Ambuja? How do they look on the charts?
Neeraj, ACC was also a call in the morning, I think, on the sell side. Clearly, the cement stocks didn't participate much in the bounce back and have been weak.
Right. Even though most of the banks are under pressure, Ashwini, would there be a stock that you would take a buy call on? Or, for example, in IndusInd Bank, one of some of the private banks which have shown relative strength, of course, they're still weak, but relative strength in the market.
I mean, what does relative strength mean? Tomorrow they can start falling again. That's the whole point. If something is showing green, that does not mean that that stock is moving up while the market keeps going lower. The point is that if the overall chart is weak and anything shows you a green tick, chances are that's a good opportunity to sell short. The bank nifty is also weak along with the other indices. So no question of buying anything, particularly on the day when the 200-day moving average on a large index has broken down.
A weak pocket normal is looking slightly okay today, Ashwini, and which is why my question. Would you short Maruti, M&M or Tata Motors? Because these three are probably giving you that opportunity. 0.5% in the green.
See, obviously, you will get pullbacks in the market. So once you get a 3 to 5 day type of pullback, that would be a good opportunity to short. Like 57.50 was the right time to go short. Again, you have to see, even in auto stocks, you will see pullbacks. Nothing keeps falling. So maybe another 2 or 3 days of green, and then there'll be good short sells again.
Mitesh, you track this one closely. Aurobindo Pharma, what do you do here?
See, this was a stock which continues to maintain the bounce back. But since I'm not looking at really trading long, I've been avoiding the stock. In fact, there is no weakness on the charts for the time being, and I suspect the stock could possibly go up to levels of around 160 to 170. But given the fact that market is looking very weak, we are avoiding long position. We only had one on Dr. Reddy's, which is a slightly better chart compared to Aurobindo Pharma.
Okay, the other two would be, Mitesh, a PFC, REC, and what do you do there? They're showing that little bit of a green today, but they were extremely weak in yesterday's session. Would you initiate shorts, PFC, REC?
Neeraj, I think around 188 to about 189, which is also close to the 200 average, would be a good area to short a PFC. Similarly, I think for REC the levels would be around 215 to about 216 on the upside. So maybe on if they manage to continue to show this kind of slight tick up on the tick up tomorrow as well, I think we would look for some kind of shorting opportunities.
And the other one, Ashwini, that I wanted a view on was RelCap, 5.5% lower. Typically ADG, high beta, moves with the markets and tends to extend those losses. Would you initiate any trades on RelCap?
I think post whatever bounce back these stocks had, I think again you should go short. Don't worry about what's happening in the brotherly story. Chances are that stocks which make lows keep on making new lows till the selling stops. And I think these stocks have been in a big bear market for the better part of last 1 year. So no reason to get into them on the long side.
Okay, gentlemen, let's start winding up the market. It's looking extremely weak for the session, so down about 1.5%. Interestingly, we're closing at pretty much the lowest point of the session, breaking below 55.80, the previous intraday low, 55.70 coming in for the closing figure on the index. Your cyclicals are your key losers, as of course a big chunk of the fall gets attributed to banks. So the bank nifty is down in excess of 1.5%. You're looking at Jayaprakash Associates, Ultratech Cement, HCL Tech, TCS. Some of the key IT stocks also succumbing under selling pressure. Infosys is down about 2.5% as well. Metals in Tata Steel, Jindal Steel and Power has looked weak. Bharti Airtel has given way, down about 2.5% there. I was talking about banks also being a key contributor to the fall. ICICI Bank, Bank of Baroda, State Bank of India, all of these counters have looked weak. Reliance Infra, of course, giving away about 4% in the session. DLF also looking weak. IndusInd Bank succumbing to selling pressure. The ones which have held out, Dr. Reddy's comes out on tops, and that's on expected lines, 3% up. Coal India up 2.5%, and Sun Unilever up about 1.5%.
It's a slice of red on the broader markets, with the market breadth to extremely pessimistic, 3:1 or 4:1 in favor of the declines. Almost 4:1 in favor of the declines, so not looking good for the broader markets either. 2 days on a trot. Manappuram Finance 6.5% lower, Jan Irrigation 6.5% lower. No prizes for guessing that infrastructure has been beaten out of shape. It's not just Reliance Infra, IVRCL. I mean, you name it an infra stock and it would be in the red. That aside, Videocon has lost meaningful ground, 6.5% off today. We spoke about Reliance Capital just a while back. That's looking weak. Cement as a basket has had a very dismal day. It's not just Ultratech which is down 6%, but some of the others. India Cement, you heard it as well. That stock is down close to 2.5 to 3%, so not looking good. Reliance Communications, the star of the last 2 days, especially the day before yesterday, is reeling under pressure, so 2.5%, and giving company to Idea as well. I think Idea should be in the red. I don't think any of the telecom stocks have done too well. Maybe a Tata Communication on the land sale news, but that would be about it. Some of the communication names haven't looked good either. That aside, Pantaloon 4.5% off. Never mind what happened to MCX. Financial Technologies is down close to 4.5%. Adani Enterprises back to 209, 210. So after that brief rally, both Adani Enterprises and Adani Power are back in the red. Jet Airways, deal, no deal, doesn't matter. 3.5%, 511. That one is off. JSW Energy is in the red as well by 3.5%. And all of these are essentially names which are fairly liquid. I'm not even talking about small caps. There are tons of these which have fallen on volumes. I mean, you can just keep on naming some of these small cap names and they would be in the red too. But large caps and larger mid caps, liquid mid caps have fallen quite a bit. And that's the worry. 2 days in a row, we've had abysmal market breadth in addition to what's happened to the Nifty. And I don't think the global cues have looked too great either. So Europe too, in all probability, would be in the red as this point of time as well. So yeah, it's looking very bad. More so for the large caps, but yeah, mid caps too in the last 2 days have fallen quite a bit.
Oh yes, indeed. It's a screen awash in red. Get in closing comments from both our guests. Ashwini, come to you first. What would be your thoughts at closing for the market?
Well, the market is now clearly on the downside and gaining momentum. I think the IT index would lead on the downside now. And, that's the whole problem with the one-dimensional market. It's fun when it goes up, but when it comes down, chances are it comes down 3 times as fast as it went up. So basically, I think we will be around 54, 50 in pretty short order. The bounce backs will not last a whole lot, and people should be very careful of finding value, because by the time all this ends, you may be much lower than where you think today, because 5600, 5630 was a fairly key zone, and the breaking of which basically means that the bears get more strength.
Mitesh, what about you? Your assessment of trade?
I think I also maintain, we've been maintaining in fact a negative bias since today morning. Very clearly, the violation of 200 average doesn't hold the market in good stead. And given the fact that we've not really had any signal of strength around the 200 average, we did bounce back for about 2-3 days, but that was only 0.5%, about 0.75% kind of move. While when we have started falling, the momentum or the day range has been much higher as compared to the rising days. Very clearly points out towards the momentum and direction on the downside. And I think I would prepare myself for a test of around levels of 5400 about 5420 in the next few days. And I think bounce back to about levels of 5620, 5630 now would be good shorting opportunities.
Mitesh as well as Ashwini, thanks so much for joining in today and giving us that perspective. So that's pretty much the technical angle on the market. Rajat, you've been waiting by, but before we let you go, really, just a couple of more thoughts. Hero MotoCorp, for example, we were talking about it with both our experts. You track that stock as well with a magnifying glass, and Indian markets have written an official obituary, I believe, for the stock. Is it time to think about it differently, put money into Hero MotoCorp, or you would not do that?
Well, if I break the arguments of Hero MotoCorp into brackets, all the positive arguments have been with the company for the last 2, 3, 4, 5 years, right? So the positive arguments does not change. The only one new positive argument is that the stock has become fairly attractive on most of the valuation parameters that you see. But I think the most critical question that investors want to know right now are two. First, how much of market share loss in FY14 can further happen to Hero MotoCorp because of HMSI getting more aggressive and launching their newer variants? And secondly, what kind of success story you would like to spin out of the export story that they've just started rolling out over the next 2-3 years? These are some very, very structural, fundamental questions which we cannot find an answer maybe in a month or in a quarter. You probably will have to monitor events closely, and it may take 12 months to get a definitive answer. Till that time, I think you will see shades of outperformances and underperformances. The strong balance sheet, the very strong franchisee caps any downside in the stock from here. But the upside is a function of you getting definitive answers to some of these questions.
Right, Rajat, if one works with the assumption that in the near term FIIs will turn net sellers, do you think it's a matter of time quality stocks will also cave in? Names like Sun Pharma, HDFC Bank, stocks essentially which are moving up because of global liquidity.
Well, yeah, because those are the stocks that they have been buyers for the last 12 months. So if they were to sell, they will sell what they probably hold. And if they want to realize any worthwhile money out of selling, these are the only stocks that they can sell to generate any worthwhile cash, because the rest of the market is so badly hit right now that, just a little bit of selling can itself damage many of those prices. So if there are outflows by any of the large investors, then I would think some of these stocks which have held on very well would see some casualty, and that is how the market typically bottoms out. In the last leg of the fall, you typically see the most resilient names giving up, and that kinds of creates such a poor sentiment that the bottom formation of the market eventually happens then.
Rajat, really appreciate you being with us. Thanks so much for taking the time out. That's it. However, in terms of the market opinion, live market opinion, we'll take a break, come back with a check on the European markets as well. I'm guessing they are also not looking too pretty.